On.
Broadcast is live.
Yeah. Hi, it's Mark Moppin. I'm here with my good friend Jeff Dameron, and I have been working for a company called Bottom Line Concepts, and I'm getting a ton of my clients and people I know that run businesses tax refunds under the Cares Act, and most people don't even realize it exists. And the reason I asked Jeff to come on today is I've got two of my customers. One of them was a very large appliance repair guy, had 20 employees, so that's roughly averages out to be like a $200,000 tax refund. And and the CARES Act originally under Trump and that it was the PPP. So most of you guys have gotten payroll protection. What is it? Payroll? What's that?
Payroll protection plan.
Yeah,
Basically, back then you could get either one, but
yeah,
most folks took the PPP.
yeah. And which my wife and I did that, and then under the Biden administration, they came out and said you could get both PPP and the ERC refund. So that's an incredible thing because now all of a sudden for each one of you, if you've got over 5 W-2 employees, you can get back up to 26,000 plus dollars,
That's
and it
true.
usually averages out to be about $10,000 an employee. So so I had this appliance guy had 20 employees, which would be $200,000 refund. And he went to his CPA, and the CPA told him he was making too much money, which it's not the CPA's fault because he's just basically looking at it from an accounting standpoint. But there's all kinds of rules where it doesn't apply necessarily to the money. Jeff will explain that a little bit more. So, and I had a second customer, the exact same thing happened, and now they're both getting refunds back for the full amount. So, and then from a little exploring, I found out that there's just an unbelievable number of large tax companies that are using bottom lines concepts for their customers because of the requirements. So, Jeff, I think I'm going to shut up here and let you explain because your knowledge is greater. Jeff actually works for Bottom Line Concepts.
Yeah, thanks, Mark. So basically, the employee retention credit is part of the CARES Act of 2021, and it's designed to reward businesses and nonprofits for keeping America rolling, like keeping their employees employed on payroll during that difficult time. And so it's a grant. You can use it for whatever you want. You don't have to pay it back. And there's no strings or stipulations on how you can use it versus the PPP that you specifically had to use it for, your payroll. So think of it in the simplest terms as a COVID payroll refund. So if your business or nonprofit was operating during the 2020-21 timeframe, and it's typically the last 3 quarters of of 2020. So, and then the first 3 quarters of 2021. Now, what Mark was alluding to is that most CPAs and accountants, and they're our most trusted advisors, they're great at business taxes, but they're not always knowledgeable on the employee retention credit program. There's lots of tax regulations and hundreds of pages. So they look at it from a qualitative point of view and they say, well, you didn't have a revenue reduction, so you're not going to be able to qualify, which is absolutely not the case. In the ERC program, and Mark can send it out, or we can speak to it, just a couple of them. There's 12 or 13 conditions that if they're met, only a couple, even like one or two, if that's met, that would determine it to you to be eligible to go forward and apply for this refund. So and even if your business was deemed essential, you can still go for it. So two parts of it. There's the government, I'd say the governor of each state had an executive order, and that effectively shut down or changed fundamentally the way businesses and nonprofits operated. So, and the time periods differ slightly, but for the most part, it was, a good chunk of both 2020 and 2021. So what what the CPAs and accountants aren't realizing is that by virtue of, I'll just take a restaurant as an example. So a restaurant, Mark, maybe couldn't have dine-in customers anymore. More than likely, when they did, they had to have social distancing, like every other table or screens, or they had problems getting their supplies. You know, all kinds of things, change in business hours, shut down for a while. So some of the items include, I'll just read off, this will take a second. A change in business hours, partial or full suspension of your operation, shutdown of supply chain or vendors, reduction in services offered, reduction in workload, workforce or employee workloads, disruption in your business, division or department closures, inability to visit a client's job site. That's mainly for maybe like construction. Suppliers unable to make critical deliveries of goods or materials, additional spacing requirements for social distancing, change in job roles or functions, tasks that couldn't be done from work or, from home while transitioning to remote work. So manufacturing, for instance, restaurants, lack of travel, lack of group meetings. So if a business owner or nonprofit could say yes to one or more of these conditions, we have grounds to say we're eligible. They're eligible, and we can move forward. So the process is very simple. Bottom line concepts, just a little bit about us. We've been around since 2009, a leading contingency-based consulting firm based in New York originally. Now we've moved our office to Miami, Florida this last year. We have over 200 employees. We're one of the first companies to get into the employee retention credit space. And some of our clients are Fortune 200 companies. You know, we have Starbucks, we got the New York Yankees, Domino's Pizza. We have the largest publicly traded accounting firm, Ernst & Young. And in fact, they send us some of their clients. And to me, when a CPA firm of that size is sending their clients to us because we're subject matter experts, we have over 30 full-time, tax attorneys and CPAs on staff. We've done over 20,000 of these, Mark, in the last, year and a half, getting our clients back over $3 billion, and we guarantee our work, we guarantee our fee, we have full audit protection. We've not had one audit out of those 20,000. And, we have a portal at the IRS, one of very few companies to have a portal at the IRS. So we're able, Mark, to track real time the status of our client's refund, which is great. So basically the process starts with a letter of engagement, outlines the scope of work, and it's a confidentiality agreement. Our fee structure's in there. Then the next part is really the most important part. The client gets a questionnaire, takes 5 to 10 minutes to fill out. It's a high level overview of the whole process and their business, what happened during that time frame. So it helps us to put a picture together. Then they're assigned a project manager. The project manager will give them a list of documents they need. Typically, it's the payroll journals, the 941s, gross revenue, and if the client has received the payroll protection plan money and had the loan forgiven, either one round or two, a copy of that. That gets uploaded to a secure encrypted data link. 3 to 4 weeks, we're able to tell you down to the penny what you can expect to receive, what they can expect to receive. And then typically in 3 to 5 months, the U.S. Treasury issues multiple checks. So there's like one check per quarter. They typically come at the same time. They come to the address that the client puts on the form. And we just ask that within a week's time frame, just send us our fee. So that's pretty much a quick overview of it. Again, it doesn't cost anything to determine eligibility. It's totally a free review. We're taking all the risk. We're doing all the work up front. And it's really an amazing program. And having helped over 20,000 businesses and nonprofits, I mean, this is grant money that will go away within 24 or 26 months. The program is ending in March, April of 2025. And I tell folks, if you're going to apply now. Don't wait for 6 months or a year, because we never know, Mark, when the rug can be pulled and they say we ran out of funding, maybe like some of those SBA loan programs. So that's kind of just a quick overview of bottom line, the employee retention credit program. how we can determine eligibility, how we work, and how it all comes to fruition.
Yeah, and if you're an accountant or CPA and you want to contact me, I can, and you've got a lot of customers that this would work for, I can set you up so that you're actually getting compensated for each one you're submitting. So
Yeah, you
please.
can become a referral partner. Mark's is alluding to that, and it does not cost anything. And trust me, we have it happen all the time. You're, the clients will thank you for sending them to us.
Yeah.
So,
Yeah, I've gotten that from everybody I've dealt with. So anyway, that's just up for accountants, CPAs. Call me. We appreciate your time. I'm going to end the meeting now. Uh, let me see. I got one question here. Let me show it. It says if your business actually was closed in 2021, do you look back to qualify? Jeff, could you answer that question?
yeah, so it's for 2020 and 2021, so it's definitely worth taking a look. If you had a minimum of 5 W-2 employees, say in 2021, we could look for eligibility during that time frame. And you may not get obviously all the quarters in both years, but it's definitely worth checking into.
Yeah, yeah, it was a really good question. So you could contact Jeff directly for that if you want at 248-860-0853, or you could contact me.
Yeah, and you can send a text, and again, so and Mark will have the information on how to, submit your business for, it's a free 15-minute consultation, and we'll just do a quick overview. What I just described is essentially, what the call will go into, a little bit more detail, and we'll have a pretty good idea by the end of the call, whether or not it makes sense to go forward and check in eligibility and see what we can help you with. So again, there is no cost to do this. It's only a benefit. We only get paid if we're successful in getting you a refund. So it's
Yeah,
a real win-win.
yeah, yeah. Okay, thanks, guys. I'm going to end the broadcast now. We appreciate you being on, especially it was a short notice. We only gave a 15-minute notice for this broadcast. Appreciate it.
Absolutely.